Good evening, everyone. I think our session has started. Just to introduce myself for today's session, which is I think a very exciting title for our session, FinTech to the Rescue and New Roads to Compliance. I think it's really very agile to what the times we are living. Just to introduce myself, I'm the moderator for today's session, Renu Audit, Director for Authorization and Supervision for Financial Services Commission. By background, I'm a lawyer across few jurisdictions, and my interactions or experience so far has been very much in financial services, compliance, regulations, and now this whole digital space, which we are exploring with every passing day. So this is where I am. So I'm very pleased to be given this opportunity to moderate this session. I will very quickly introduce my three panelists, very eminent panelists, very diverse panel we have. The first one we have is Vincent Chatard. Vincent Chatard is currently the Chief Operating Officer of Mauritius Commercial Bank, one of the largest commercial bank on the island in Mauritius. And he has spearheaded the digital factory project for the bank since 2018. He's occupied various senior executive positions in international banks and organizations outside Mauritius, just to name a few: Crédit Lyonnais, KPMG France, Banque Rebecco. By training, he is from engineering background, from Agro Paris Tech School of Engineering, masters in so with specialization in IT project management. And he's also gained an executive MBA from HEC Business School. Welcome, Vincent. Our second speaker is Miss Anna Ekeledo. She is the Executive Director of Afrilab. Afrilab, we all know, is a network organization of nearly 292 technology innovation hubs, and they very excitingly, I think, is spread across 49 African countries. She's also a member of the advisory board of the African-Europe Innovation Partnership. She's been involved in pioneering various impact-driven projects in Africa and across, like Virjola Foundation. I think I won't do justice to name all, but just a few: Wild Fusion Digital Center, Google's Lagos Business School, and she is also Africa-Europe Foundation Digital Strategy Task Force member. She holds a degree in psychology from Covenant University of Nigeria and an MSc International Marketing Management from the University of Leeds, UK. Welcome, Anna. And then we have our last speaker is Oluwasanmi Akinmusire. Please excuse me, Sami, if I'm not pronouncing your name correctly. You are the Chief Operating Officer of Imali Pay, which is a Pan-African GIG economy-focused platform to improve financial wellness of GIG experts across the African continent. You are a practiced and a talented commercial management and a FinTech professional over 15 years of experience, ranging from account management, trade marketing, distributions in the fields of energy, consumer finance, particularly telecommunications. And I think financial technology industries remains your focus. You have your career spanned across global giants, very privileged names like MTN, Samsung, and Cellulant. So welcome to the panelists. Just to set the scene, I think from the topic, to do justice to our topic, we are talking about here in current times, a very dynamic regulatory landscape, which we are seeing is evolving, no matter which part of the world we are, whether we are in US, Europe, East Asia, Africa. So there is a lot of dynamism in how the regulatory landscapes is changing. We are also seeing increasingly complex global business environments coming in. And most importantly, we are seeing rapidly technology and the innovation seeping in. So somehow these have been driving, what it's doing to the companies is increasing the focus on their governance and compliance management programs, internal controls, so that they are in a position to comply with their legal and regulatory obligations. What we are seeing that the impact of this is that technology and innovation on one hand is bringing new products, like whether it be payments, peer-to-peer lending, insurance, private wealth, virtual currencies, I think, is quite hype one. But on the other hand, it is arguable, and this is what we would like to spend next half an hour or 40 minutes. It's arguable whether does it create challenges in the field of compliance and conduct, particularly from a consumer protection perspective, a data protection perspective, anti-money laundering perspective, and so on. So just to move on to my first question, I think while we are seeing that digital innovation is transforming the traditional landscape, right? Financial institutions are under tremendous pressure from the fintech companies as innovative companies. But how are the current entrepreneurs and the leaders in the traditional space and those who are moving into from fintech and getting the market share of the traditional space, how are you managing? How is it impacting your business? And to start with, maybe I'll start, Vincent, from you, because you are in an established traditional space of banking and moving into the digital space. So maybe you can just share your experience, and maybe it can be then just followed with Sami and Anna very quickly.
Hello everybody. Thanks, Renu. Yeah, as an incumbent bank, we're building from an existing position, obviously. I think there's different aspects. We need to stay relevant because there is a lot of competition and more and more competition with new entrants. So I think as an existing bank, we need to look at the way we're servicing our customer, going in more into simplicity, mobile-centric, and basically refine our service. Because, for example, with the newcomers, you can do everything on the mobile, and with existing banks, it's a bit of a pain. So we need to keep investing in simplicity to continue our business, basically. I think the second aspect is we can offer our service to others. We can offer existing service. So, for example, payments. We have already some rails in obviously Mauritius, but also internationally. There's the SADC platforms for payments. So there is a lot to offer to newcomer in terms of utility or banking as a service. So that's the open banking. That's quite a lot of new things that basically instead of doing selling your service, you will sell the rails. And that's basically can be many things, also compliance. And then the third aspect is you can partner with new entrants, RegTech that would do compliance better, FinTech which are in the space of payment or wealth, and integrate them in your offer. So I think that's a very exciting future that's coming.
Yeah. Anna, would you like to come in from your perspective?
Okay, so I mean, from my perspective, it's really exciting to see what's happening in the fintech space, right? And if we really simplify what fintech is, it's basically digitizing the financial sector, right? Digitizing financial products and services and all of that. Speaking from the perspective of the African continent, it's I would say fintech is a sector that has gotten the most attention in terms of innovative startups and solutions that have, scaled significantly across the continent, that has raised the most amount of funding. Of course, we've heard about the successful case studies of Paystack, for example, that was acquired for, $200 million, and Flutterwave, who now has the unicorn status, over $1 billion valuation. And what we've seen in terms of the impact of fintech across the continent is, coming from, looking at a continent that has limited digital infrastructure, for example, where consumers cannot access the services of traditional banks, right? Or because they don't have physical access to the physical banks, FinTech has found a way to carry a significant number of consumers, leveraging on mobile technology, which has had, immense growth and penetration on the African continent, to be able to access, financial services, through digital technologies. But then also looking at other aspects. So we've seen how FinTechs have been able to change, customer expectations of speed, efficiency, and accuracy of services. So gone are the days where you would have to go all the way to the bank, do a transaction, wait a couple of hours or days for the money to get to the other person. Now people expect speed, but also customized services as well. So with, looking at artificial intelligence, machine learning, and other forms of technologies. There's also that customization of services that both FinTechs and traditional banks leveraging on technologies can now offer to members. But then looking at compliance, talking about the issue of compliance and managing risk, and issues of detecting fraud and the likes, which I would say that, yes, that's one of the, when we look at the FinTech sector and then we look at regulators and the government, that's always the sole, that's usually what causes friction, right? So on one hand, the government is trying and regulatory bodies are trying to understand how to mitigate these risks. And on the other hand, FinTechs need to innovate fast, as opposed to being tied down in bottlenecks. But what I'll say is that we're seeing increasingly that with the integration of advanced technologies that I mentioned earlier, big data and analytics, AI and the likes, and algorithms, we can now process a vast amount of data every day from customers, which can help to mitigate certain risks, to identify fraud, to do KYC, AML, and all of this, which can also support in meeting up with compliance guidelines as well. But anyway, throughout the panel, I'm sure we'll talk about more ways to leverage on these technologies and how we can better bridge the gap between the compliance and regulatory environments while still supporting the growth of financial technologies. Thank you.
Sure. Thank you, Anna. I think I'll just pick up on your last point. I think very interesting point in the sense that while you're seeing the penetration of technology much faster in Africa, so we're just getting close to home into Africa, but there's always a challenge of regulators meeting that pace from a compliance and a regulatory perspective. And given that Africa is so large, on one hand, we're seeing the penetration or the usage of mobile is unprecedented in Africa compared to any other continent, right? But at the same time, we're seeing the growth is very uneven in Africa. For example, from my research, I could see that the East Africa is, the digital finance ecosystem is much more well developed in East Africa as compared to in the southern of Africa, but even less developed into, I think, the West Africa. So maybe I can take forward this question to Sami because you have a diverse experience and exposure into Africa. So how are the different regulatory frameworks, and is there any hope of getting some sort of common thread across? What is the way forward from having a regulatory aspects to it?
Thank you. Thank you for having me on the panel. Very interesting introduction by my co-panelists, and I think they've just set the pace nicely for us to go into this conversation. In terms of the question you're asking, yes, there's hope. I'll take a step back. I was recently asked by an investor, why should I invest in Africa rather than invest in the US? And he said something very interesting. The US is, you could say the US is a continent, right? Not necessarily, but 350 million people, one regulatory body, the same rules across that country, that large country. And then you put that side by side with Africa, and then you think about 50 plus countries in Africa with different regulations, and you think of how fragmented the continent is. And when you start to think about that, it's very difficult to respond to that question from the investor. But, I'll just tell you the answer to that question before I go back to what you've asked. I said, where there are problems, there are a lot of opportunities, right? Now, not problems in a bad way, but there are a lot of opportunities on the African continent to change people's lives. Now, when you take it back to regulation, compliance, financial services, the continent is so fragmented, but there is hope. Why do I feel there's hope? It's because you can already see a very proactive approach from some countries on the continent, particularly, imitating what was born out of the UK, which is a regulatory sandbox that helps, people within the space to jump in and experiment without the huge pressures of regulation, right? We've seen at least 8 countries on this continent who have gone ahead to provide a regulatory sandbox. Now, how well it is working is another question, right, for another day. But you can see that there's at least the intent to move in the right direction. Countries like Nigeria, Sierra Leone, you'll be surprised, Ghana, Mozambique, 8 countries on the continent as at 2020 are created a regulatory sandbox. But again, how well it is working is something that we need to maybe discuss on another panel. So, the problem with FinTech is that it moves very, very fast, right? Innovation, like Anna said, a lot of innovation. And the problem with regulation is that if it's not moving at the same pace, then, a lot of the change that we want to see and the impacts that we want to see driven by the FinTech sector is basically blunted, right? So when you look at it that way, it means that we need to have a very agile regulatory framework or regulatory approach to the new world, the new world we face, the new world we live in terms of finance. And I like to take a step back to say the only way we really are going to change lives on the continent and impact people and move, and the fact that still 60% of this continent is not financially included, and be able to move that needle faster, more efficiently, for me, is collaborations between the traditional banks and the FinTechs. The traditional banks bring to the table years and years of experience, particularly around the major crux of our discussion, which is, how do you deal with compliance around money laundering, terrorism financing, and all these things that they've invested a lot of effort in, understanding that space. The knowledge depth is deep and very, wide. What FinTechs bring is innovation, technology. I feel that if we're able to find a balance and a midpoint to bring those two together, we will actually be doing some spectacular things. Now, back to your question again. Yes, there's hope for the continent. It may take a while. It's a deeply fragmented continent, but I feel that with more intent from the regulatory bodies to involve more stakeholders, what you typically see is that when regulatory bodies talk, they want to talk to banks, not involving enough of the FinTechs in those discussions. We've gotten to a world where the FinTechs can no longer be ignored. And I honestly feel that if we have regulators that are willing to move as quickly as possible and are also willing to bring together the right stakeholders into the right forum, we will be able to achieve those goals. But it will take time, but there's intent.
But Sami, one point you made, I mean, I think we all agreed from, I think all the three of you have brought in, the partnership, traditional, for example, the banks, players, financial service institutions and FinTechs. But I think one common thing which you mentioning is that which ties between financial institutions, traditional and FinTechs, is actually this whole financial inclusion and putting the customer to the heart, right? To create more safe environment, bring the innovation to them, bring the whole means of bringing technology to them, bringing finances to them. I think that's cut across. So, and I think Vincent did mention in the beginning that whole approach to customer attitude, consumer behavior, this is changing. So how are you seeing it from your space? Back to Vincent and then to Anna on this one.
Yeah, I think as it was said, we should see from a customer experience perspective, and opening an account can be quite complicated, and it's also linked to the local regulations. So to do, for example, EKYC is not from a compliance perspective possible everywhere. In Mauritius, for example, there is an evolution, but it will be mostly on local customers, not international. So you need to have these evolution. But I think the key is, as it was said, it's click and easy, customer centric, good design as well, human centric design. And then behind the scene, you have all this data. The data crunching allows to have new ways of doing things. In terms of compliance and onboarding, you can do some risk-based onboarding. So you have the easy ones, and you can prove that from the data you collect. And then you have the more complicated cases where you need to go back to the customer and ask further questions. All this based on big data and data crunching. That's the same for credit scoring. Before, the credit scoring was basically done on rules. So if you have that much salary and that much debt, etc., then machine learning is coming and identifying people who are likely to reimburse you, and with some data which are a bit counterintuitive. So, for example, average saving over a period is a good indicator that the guy will reimburse the loan, and that's machine learning telling you that. So there is a vast of data use in this compliance field. It's starting to be regulated. I think we can do more. And I think, as it was said, we're as an incumbent bank have a lot of data, and we can crunch that with the right data protection and offer that to newcomers.
Yeah, sure. And I think from a consumer perspective, definitely the expectations are on the rise. But as you rightly said, it is balanced with, of course, the data protection, the privacy, and so on. Anna, are you seeing some similar trends across different parts of Africa when you are interacting on consumer needs, expectations?
Yes, absolutely. I mean, Vincent basically said it all in terms of consumer expectations, using AI, machine learning and all these tools to actually improve customer expectations. But then another aspect I'd like to speak about, in addition to what he said, is the ability for customers, and consumers to also access services increasingly across other sectors, right? So now you see more and more of the conversion between FinTech and other sectors. So like the education space, for example, we now see innovative products that allow people to access educational services, either linked to their bank accounts or linked to their savings accounts, and then they can either pay, in installments for their kids or even take a student loan and all of that. And this is all facilitated by an innovative FinTech solution or through an integration of a FinTech API with, an education technology platform, right? We see this cut across other sectors as well, access to health services, for example, through FinTech, direct, either FinTech services or, banking services, leveraging on technologies and the likes. But another as well is that we're also seeing, in some African countries more than others, of course, Sami re-emphasize, and I'll say it again, that Africa is an entire continent, right? We've hit 5 countries. So everything I say is at different levels of growth, right? Some more advanced than others. But another thing we're seeing with governments that are quite progressive in terms of digitizing their services, their social services, particularly to their citizens, is we're seeing people able to better access government social services through FinTech solutions or platforms or integration of payment services, for example, to access government services, whereby before they would have had to line up for hours or days, just to pay for a driver's license, for example, or just to pay for your taxes, or, whatever it is that you need to pay for, energy or power, whatever it is. But now it's just being digitized through the payment process. And then finally, I would say this is from a merchant's perspective, but also improves the customer experience, is merchants now being able to have more solutions through FinTech. So things around inventory management, for example, that helps them offer better services to consumers through FinTech platforms of value-added services. So now we're seeing that FinTechs are going beyond just offering an option for merchants to collect payments, but they're also adding value-added services that help the merchants, improve the customer's experience, understand their customer service through the analysis of big data to be able to better target them with, products that are more personalized and better for them, increase loyalty, manage their accounting and all of that. So yeah, these are different ways that, and then also from peer-to-peer, we're beginning to see some really innovative solutions around peer-to-peer payments as well.
So that's really like something which is keeping FinTech very, very agile, right? Because you see a lot of innovation, a lot of reach out, a lot of traditional going into a modern way of doing and having more financial inclusion. But perhaps I can just ask Sami a different side to this, different facet to this question, is that comes along with all this comes the threat of frauds, the cyber securities, some unethical lenders coming onto those platforms as well. And let's not ignore that there is still more to do to educate those consumers and customers, right? There is still insufficient financial education, and there's more to contribute to that, right? Don't you see a lot of information asymmetry there? And how are you seeing that from your perspective, Sami? And what more needs to be done? Where do we need? I hear that we have a hope, we need to go faster, but what more needs to be done?
Look, a lot more financial education, a lot more commitment from governments across the continent to tackle this problem. It's very unlikely that FinTechs or even banks will achieve it all by themselves. I feel like sometimes FinTechs may even have more reasons to want to solve it, right? Because look, everybody is trying to crack it. Traditional banks, to a large extent, are at a comfortable point. I'll give you a very good example. In a country like Nigeria, thank God that the bank verification number was introduced. Before the bank verification number was introduced, you would see a lot of banks giving out very interesting numbers as to how many people they included within the financial year, right? When bank verification numbers were introduced, it became very clear that they were including people who were already included, right? So you would see that possibly in the financial year, you would see 5 million bank accounts created. However, just 500,000 new bank verification numbers have been created along the lines of those accounts. What does that mean? You cannot run a bank account in Nigeria without putting in a bank verification number. So if 5 million bank accounts were created and are active, while only 500,000 new bank verification numbers were created, it means actually only 500,000 people have been newly financially included. So what am I trying to say? You see a trend where traditional banks are comfortable. They want to maintain the trends that they have. They're already highly profitable. They want just to keep those, trends going, and they want to keep move it in an upward manner marginally. Then you see FinTechs on the other hand who are engulfed with just, being able to stabilize and run a business, and then at the same time put their innovation out there. So you see that there's a gap there for people to really be able to drive the agenda, to help to drive financial education, and to even drive the importance of people, stop keeping their money under their beds, or putting them in holes in their farms, for them to put them with financial institutions that they can trust. What am I trying to say? The onus lies with the governments. The governments of these countries across Africa must deliberately show commitment to improving particularly financial education. And it's, putting out there incentives for people to do that, for people to join financial institutions, and then also putting out a very conducive environment where, again, I will repeat, traditional banks and FinTechs are able to work together. It's very interesting what we see nowadays. Traditional banks are open to offering, their services to, general consumers, while we're seeing more and more FinTechs that are picking a niche for themselves. So, for instance, Imali Pay, that I co-founded, we are focused on freelancers, contractors. We're focused on gig workers, right? So we're not focused on everybody. And what I'm trying to say is, when we see more and more collaborations where banks are able to plug in relationships with 2, 3, 4, 5 FinTechs who are all focused on different niches and different sectors of the economy, then we will be moving quite faster, because it looks like when it comes to that growth and that ability to move with speed, that is coming from FinTechs. But FinTechs cannot achieve it without the solid base of traditional banks. Again, back to where I started from, the government has to play a very strong role in providing the environment that drives this and providing a conducive, which means financial education, getting the message out there. Of course, also making sure that there's infrastructure to drive it, because a large part of, for instance, Nigeria and many other African countries are still not covered under a telco network, for instance, right? Or for some of them, they are still not getting data services. It tells you that a lot of the efforts that we are making as financial institutions is still very much in urban and semi-urban areas, right? Whereas there's a large population sitting in rural areas. So government has a key role. Government is central to this. And then government needs to ensure that there's a conducive environment for traditional banks and FinTechs to work on this together.
Absolutely. I think that's a very powerful message. I think, Sami, you mentioning that there is a lot more to do in educating. There's a lot more to do, build up and reach out to rural areas, not only urbans and semi-urbans. There's a lot to do in partnership between traditional and the FinTechs. It's not one-man show. One can't do it. And I see when I'm talking, and I think Anna did mention it, and Sami, you did that as well. I think there's a question coming from Jira Naikawawa, saying that he would like the panelists' views on the role of digital identity in financial inclusion and how can FinTech chip in, especially considering that most of the data sets on digital identity are sitting with the government departments. I think Anna did mention something on those. So I don't know what you would like to re-emphasize something else on that, Anna, on that question.
Yeah, so in terms of digital identity, I mean, this is where, as I mentioned earlier, this is where we have, would I say, emerging technologies or advanced technologies that can really help in dealing with compliance, dealing with, managing rates, detecting fraud, improving the process of, the know your customer experience. Because, I mean, digital identity is beyond just, the basic banking transactions, right? I mean, we're talking about an integrated system where, in the most ideal situation, of course, where somebody has a digital identity and then a digital ID, and then this is tied to their interactions across various platforms, across different products and services within a country, right? Now, in terms of using technologies such as artificial intelligence, machine learning, big data analysis, and the likes, processing data, big data across board and across a normal, analyzing a normal financial behavior, or transactional financial behavior, across different spectrums. Using these technologies, anytime there's an irregularity, is more likely to be flagged and is more likely to be picked up, right? But this really involves the banks with the support. I like how Sanu kept, emphasizing, the banks, the FinTechs, the governments all working together to build these systems in order to take advantage of it, right? So this is one important area to look at.
Yeah, and Vincent, I think you've lived your experience in moving into mobile apps, I think, from Mauritian perspective. So I'm sure you've come across this challenge of handling the identity part, the EKYC, because AML is still, I think, very high on the agenda for most of the countries, including Mauritius. So what's your views on this?
Well, it was said before that we have a vast amount of data, so we can probably prove many things, but we're still regulated, and if regulation need to change to allow some digital ID. And there are some initiatives. For example, in Mauritius, there is an initiative which is from the government, and I agree with Anna. It's going beyond banking or financial services. It's e-government and digital identity, all these things. But that needs to be regulated in terms of know your customer. I think the risk base is something that regulators are looking at. Easing the pain for the normal customer and having additional checks for the ones who are handling big money, and that would go into that financial inclusion as well. The credit scoring I was mentioning, or microfinance, is easing the capability of financial service to actually disburse money. And it's not only to have an account, but it's also to have credit. So all this is getting regulated. There's also peer-to-peer being regulated. So this is the technology and the data are opening avenues. The regulations are a bit behind, but I'm sure they'll catch up.
Yeah, I think it's an interesting debate, isn't it? On one hand, we see that technology is pushing its way through, right? There is very little choice left not to go along with the swing, and I think that's where Africa is keeping it very much a fast forward foot there, as compared to perhaps the US coming up with this, in some legislation they've just come up, I think, innovation law or something, right? And so is Europe catching up, and China. So I think what we're seeing is that definitely inclusion is there, customer experience is there, innovation of products is there, but on the other hand, the whole compliance bit, whether it is AML, cybersecurity, and privacy, and so on, that equally has to keep the pace, right? So technology is an enabler to actually comply better, have more conduct better, governance better. I think this is what the direction we're looking at. But I take your views in the sense that there's more to do, right? It's not end of the journey, it's just the beginning of the journey. I think if I may end on that note. So that is bringing us, I think, very close to this session. I hope we had more time, but we don't, or we were sitting face to face, and perhaps I would have interacted more and better, but I think virtual world is still following us very closely compared to the physical world. Hopefully next time you are in Mauritius and we are able to sit face to face. But thank you very much. You've been great panelists. You have loads of experience, but and we've got some really good insights into your worlds. Thank you for sharing that very, very openly. And I've really enjoyed myself moderating this session. Thank you very much, my side.
Thank you.
Thank you.
Thank you.